Welcome out to Trading Justice 598. Joined with my brother Matt. This is Mark Justice from Tackle Trading. Going to talk about reasons bulls have to be cautiously optimistic, along with maybe a few October trick or treats that might be in store for the markets in the month of October as we turn the calendar page. Just like to mention right at the start that this podcast is sponsored by Tackle Trading, a fantastic community that we are a part of, that we participate in every day of our lives. We love this community. Go to tackletrading.com, go to the store tab, sign up for a 15-day free trial. We'll pitch it a little bit at the end as well because it's a great community. It's a great product. I know we're both fans, aren't we, Matt?
Yeah, I would say we're fans of the Tackle Trading platform, the number one trading education platform according to Trustpilot in the United States. Yeah, we take a little bit of pride in what we do at Tackle Trading, and we'd love our listeners of the Trading Justice podcast to come join us with those conversations we have day in, day out on the importance of everything in the marketplace over there at Tackle Trading. And you can obviously get a free trial of Tackle Trading at any point simply by heading over there to the website.
Listen, so Matt, are you ready to start talking about all of the reasons to be optimistic as a bull, only to throw some shower at the last 7 minutes of the podcast on things that might go wrong?
Hence, cautiously optimistic about the market here. We talked about the slightly bullish, cautiously optimistic stance we have in the Tackle Trading rankings that we put out every single week in the newsletter. But yeah, I think there's reason to be cautiously optimistic. First and foremost, we did get into a rate cutting cycle.
Hey, listen, I have a list in order to go if you want to.
Oh yeah, I'm just saying. I think there is some reasons.
There absolutely is some reasons,
and I also think there's some reasons to be a little cautious as well.
All right, let's start with the first one, technicals. Matt, now you're going to break down the further technicals. I read your technical piece in the Tackle Trading newsletter every weekend as a consumer. As someone who trades my own account, who manages my own money, I read every word of it because you've made me money in some of your calls in this newsletter in recent months. So when someone makes you money, you tend to listen to what they have to say, right? Now, one thing I like to note on top, and then walk us through your technical analysis on the different things. One of the things I love is that when I see, if I pick up intraday patterns, for example, this week I picked up we had weak economic data on Tuesday, and after that, the next couple days tech led. And then we had strong economic data on Thursday, and then everything else. We've seen that algo program before. The heads, bulls wins, tails, bears lose type of algo program where things just take a turn. But break down the technicals for us, Matt.
I would say there's a little bit of that going on the algo programs. We're very familiar with the algo programs of 2022 specifically, and that's pretty much the algo program that you were referencing there. But I would say in general that's an intraday conversation as of right now. I wouldn't say that post-Fed as of right now we've seen substantial separation in one index or the other. Now, we have seen separation from a sector perspective, but we have not seen any separation from an index perspective sans IWM. IWM is forming a little bit of a different pattern in general than what you're looking at in the S&P 500. So when you look at it from an index perspective, you got the S&P on a recent breakout. And when you are looking at the S&P and in general, the market last week, I think you can have an open question right now, technically speaking. First and foremost, the technician in me that got a recent breakout on increasing volume. I have some questions regarding why not more momentum have we seen over the course of the last week? Why did the volume contract fairly aggressively in the last week following that breakout a week ago Thursday when you had the central bank officially put us in to the rate cutting cycle? On the flip side, I think the accurate way to read the price action in the last week in the market is the market playing a little bit of defense. And what I mean by that, and I talked about this in detail in the newsletter, but what I mean by that, when you get a breakout in the marketplace, not all the time do you just see the momentum play out there. Obviously, we are having a little bit of a sector conversation. I'll talk about that here in a second, but you haven't seen that separation as of yet. You haven't seen that momentum as of yet. But what you haven't also seen is any volatility to the downside. Anything on the downside in the last week has been quickly gobbled back up. You've seen a fairly substantial reduction, in my estimation, in the volatility as we kind of try to conclude this September seasonality. And so I do see the market playing a little bit of defense over the last week. And quite frankly, from a market perspective, I kind of feel like the separation that we may see from IWM and the Dow Jones versus the SPY and the Qs may not be happening until we actually have an earnings conversation. Because Mark, as you get too tight in front of earnings, and earnings starts in 2 weeks from now, you don't see a lot of radical price movement the 2 weeks in front of earnings. A lot of those expectations are already kind of dialed into the market. And so I do see the market playing a little bit of defense following the breakout. I see that as a positive step, not a negative. But at the end of the day, consolidation, if it goes too long, you start to get the path of least resistance might be down. So as of right now, technically, I don't see a lot of problems in the technical environment. Playing a little bit of defense on top of that price action and or on top of that breakout. And for the most part, you've seen fading action to the top side. So not a lot of volatility. I do think that's been a positive step in the right direction. Now, on the Q side of the equation, Mark, you do have a little bit of a difference here, as you did break out of a high base last week following that breakout out of a symmetrical triangle and a little bit of snapback here. Now, there's an old concept of tackle trading, and we talk about this very frequently when we need to see something specifically, and it's the statement, need a doji. Whenever you see that statement,
in fact, you wrote just a few weeks ago on Need a Doji in the Tackle Trading newsletter, and it's a very common situation. It happens in bearish conditions, happens in bullish conditions. It is when you need finish my sentence.
When you need a doji. And what that does, though, is it's the slowing of the momentum from an intraday perspective to allow support to get built. And so you broke out on Micron news this week, and that's what you did see changing on the index side, is you saw a breakout in the Qs. We didn't see the continuation in the spiders. That came right back down on Friday, where it really kind of formed that kind of hanging out at that pivot. And so need a little bit of a doji in the Qs, but you did see a little bit further price action, improving condition on the Qs versus what we did see out there in the broad market. The diamonds trying a little bit of a breakout, got faked out, but in general, the diamond cyclical areas of the market look pretty healthy right now. And then IWN, Mark, keeps getting interesting to me. I've not liked this space. I've said it reminds me of crude oil in the sense that volatility is everywhere, but there is a level on this chart that I do have confidence in, and it's the 225 level. And last week you were coming in like a missile into that 225 level, and you pulled back off that. That is a good thing from a technical perspective. That's what you want to see. You want to see a pullback coming into a breakout, reset that distance going into that breakout channel, and now you're starting to see the pivot formations. Now, Mark, like we've seen throughout pretty much the entire week, it was a mixed week where upward movement in price, downward movements in price, not a lot of substantial changes. Do we see that start to play out a little bit more this week, as you're seeing better patterns on IWM, a better pattern on the Qs, and a little bit of defense on the spiders with, and again, a better pattern on the diamonds as well. And so I think you got better patterns going into this week than you did last week. Felt in general, we had a good week of development, quite frankly.
Yeah, no, and one of the things I like about the technical situations and why one should be cautiously optimistic is the next trading signal seems mapped out, where I don't have to guess, right? Like if I go into Monday saying I'm going to do something bullish in tech, I just have to wait for that slowing momentum to establish and then get a little bit move higher. If I wanted to do the spies in general, right, I kind of have this consolidation-y range, right? If I want to do small caps. And so one of the things I love heading into this week is that I don't have to guess. I can come in with a bullish bias, right? But then I just have to wait for whatever my areas, because there's still some very serious dealer's choice going on in this market right now.
Very serious.
Right? Like if I want to be
Lots.
looking just,
That's a great way of saying lots of opportunity.
yeah, like, so like I can be like, all right, so here's my cyclical plays and what I need, and my tech plays and what I need. And I can let the market map that out for me, basically tell me what it's going to do. And so that is one reason that I am certainly
Yeah,
cautiously optimistic.
and I would say it's a dealer's market, dealer's choice market, right? If you're
Oh
looking
yeah, when we get into commodities, that dealer's choice is going to expand, right?
okay, so if somebody said, you know what, I like the Qs this week, I'd say good. If somebody said to me, I like IWM this week, I'm like, okay. If somebody said I like the spiders or I like the diamonds, I was like, okay. Like you're not having outside of IWM, you're not having a massive different conversation on the index side of the equation. A little bit of differences from an intraday perspective, but we really haven't seen separation on indexes following the central bank announcing the official going into the cutting cycle from a week and a half ago. What we have seen, however, is separation from sectors. And Mark, this was not to. I think this was. I know we talked about it at Tackle Trading quite a bit, but the most likely scenario coming out of the central bank was improving conditions in technology and the cyclical, while defensive take a little bit of a back seat. And that was not based on, oh my goodness, this is exactly what a cutting cycle means for the Fed. No, it was really based on consumer staples has had a really good trend for a really long time, and it probably needs to go through some degree of neutrality. Healthcare has been a really good trend for a really good time and probably needs to go through some degree of consolidation. Real estate's been a vertical parabolic trend for real estate, probably needs to slow down a little bit. And so what we have seen following the central bank is slowing momentum and the end of trends in the defensive areas of the market, which were already starting to slow down, which were already late stage trending environments. And so I'm not sure we've seen radical moves coming out of the central bank. We've had improving conditions in markets that were a little bit left behind in the last couple months. And the areas of the markets that were really, really, really good, they took a back seat. And so right now, Mark, yeah, you are looking at an improving condition on the cyclical areas of the market. You're looking at improving conditions on the technologies and the aggressive areas of the market. Discretionary is just downright froggy right now. Communications looks exactly like the S&P 500 itself, and the Nasdaq, although choppy, we all know that can play a little bit of catch up. And so the only theme we've seen so far was a known theme coming into it. Late stage trending areas of the market now showing slowing momentum and ending of trends. And where does that go? Where does that money go? Does it start a trend in tech? Does it start a trend in some of the cyclical areas of the market? Obviously, we've seen BMATs be great, but one word on one defensive sector that I'm not even sure needs to be categorized as
I don't think it's a defensive sector anymore.
It's
not in this particular time period.
Because what they do in their traditional business models, which represents a massive percentage of their company, is very defensive oriented. But what they're also doing in the build out of the AI infrastructure is very aggressive, like ultra. I almost see it like healthcare, Mark, where you treat healthcare a little bit more cyclical than defensive oftentimes, because there is some cyclical components to healthcare. But there's one area of healthcare, biotech, that is ultra aggressive, right?
Yeah.
So we might just be seeing a little bit of that play out in the short term. But as it plays out, we haven't seen a flaw in this trend. No slowing momentum, good pattern development, and now you're threatening another breakout in utilities. So I just wanted to make sure that asterisk was discussed. We're seeing defensive slowdown outside of utilities.
Yeah, no, and we'll talk a little bit more about nuclear here in a few minutes when we get into individual stock stories. Second reason, Matt, that I was raised as a trader right after the financial crisis. Didn't trade in the financial crisis, started trading thereafter. And so basically I have for the last, 15 plus years, been exclusively a central bank trader. That is the only world I've really known. We're central.
Oh, you were born through quantitative easing. I mean,
that's when I started trading at the onset of quantitative easing. I've never known any other markets other than markets that were impacted heavily by Fed decisions. When we have a bear market in 2022, It's not a coincidence to me that that was Fed induced, right? When we had a spillover into
transitory in 21, having to aggressively catch up in 22. Yeah.
and so, one of the things, and we give me K-Web, one of the things when I see central banks start to turn on the spigot, right? We saw central bank here in the United States come with an oversized cut, right? And they gave all kinds of cautionary language, but they came with an oversized cut. What did China do the very next week? China said, and obviously they were waiting for the Fed to make their move, right? The Fed makes their move, and then they came out and said, all right, we're going to do some really cool stuff over here too, right? We're going to lower a bunch of our rates. We're going to introduce some fiscal stimulus, right? And this has, whenever you have central banks start getting in a let's be friendly mode, that should give, you the, all right,
Listen,
it's a reason to be cautiously optimistic.
if you've ever wanted to see how markets respond to central bank and government stimulus programs, look at the Chinese markets this week.
Yeah.
But also China was obviously waiting on the United States central bank to make this announcement. And this is not the only thing that we're going to see out of foreign countries, Mark, over the course of the next 6 months, is because when the dollar and the United States start entertaining a rate cutting cycle, and they're going to get lower and lower and lower interest rates over the next year to 2 years, that allows, if
It
not
allows, that's a great word. It allows
other central banks to be more dovish than what they were going into that, because they couldn't move with the US because of the impact on their currencies, the impact on their countries, because of the importance of the United States dollar. And so you saw China this week literally bring the fiscal stimulus bazooka to the party. And they went very aggressive. Like, China's been hinting at stimulus for the better part of the last 2 years, but well, I should say last year or so, but they brought the bazooka on this one. And we saw it across the board. Chinese stocks just absolutely just go up, 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 up. FXI went from 26 to 32. We're talking about a country's index doing that in a very short time period. And I was asked a question quite a bit last week on a lot of these Chinese components that were lift off. BABA, for example, out of the Tackle 25, which is the only Chinese component this year, had a really, really, really impressive week. But I was asked the question at Tackle quite a bit over the last week. What do you do about the Chinese stocks? And I said, well, there's nothing you really do as of right now if you have not participated in this last little move, because you're so far range up, you're so far overextended, and markets today, they don't wait to price news in.
That's why we joke they're Mountain Dew markets, right? Everything's extreme.
Well, and it's never going to change. That's part of our culture in the market from now on. And it'll probably get even more. All I know is for the last 40 years, the way the market prices in data is faster and faster and faster and faster. And so 40 years ago, it would take 2 weeks out of an economic report to get around the entire world to have it priced in. Today, that feels like 2 minutes, quite frankly. And so a major stimulus program certainly got some front running here out of the Chinese stocks. But if this is signaling the beginning of something, then you got to think about it from not only a momentum perspective, but from a trending perspective. And from a trending perspective, you would see this as range up in a trend. You would see the news as a catalyst for the beginning point of a trend. And then you simply look at it from a pure technical perspective. Right now at 32, FXI is overextended. It's overextended because of how far it has moved against the behavioral that this area of the market does move from support to resistance through pivot formations. Number two, you're also at a very, very, very important resistance zone on FXI with the 200-day moving average right on top of the price action, right around 33. And so you look at the environment and you say, I don't want to chase. Give me development here. And so you would just be looking at this as stage 2 of a trend, which is overextended, waiting on secondary development of pattern recognition. And so whether that's a high base consolidation or some degree of pullback here, profit taking pullback, I that's what you would be waiting on. on some of these Chinese components, in my estimation.
Yeah, and just on the larger point, listen, when central banks, it is a very hard environment unless a bearish narrative forms, and we'll talk about trick or treats later on that here in the podcast in a few minutes, to go against central bank wishes, right? And when they turn on that liquidity hose, you can get dips short term. It means nothing, but longer structural trends, it's hard to fight against that.
There's an old rule in the market: you do not fight the Fed. Like I'm about as anti-Fed as it gets, and you do not fight the Fed on anything. They're the number one player in this market. They're the number one reason the market goes up. They're the number one reason the market goes down.
Yeah, absolutely. Let's get to the third reason I have, the economy, right? And it'd be like, economy, give me Forex Factory. We'll talk about the week ahead while we're doing this. Atlanta GDP. Okay, so let's go back the last couple months. What has been the sole bear narrative that bears have tried to seize on? It's been slowing growth and recessionary worries that, well, nobody's really talking about today because they spent all of their energy talking about it a few weeks ago. But ever since those growth worries, we just have not seen it in the data to further those worries, right? It's not like the worries have been eliminated.
It's a very good way to put it. Further the conversation.
Yeah, I mean, it's not like those worries are not still there, but there's been nothing that has amplified them to become more than worries, right? And there's only so long worries can keep down stocks, right?
And there's only two worries in the market: inflation and labor. And so everything else that we're going to talk about economically is not nearly as important to labor one, inflation two. And we get labor this week. We had inflation this previous week, and inflation was 0.1 on the month over month numbers. It was 2.2 on the year over year numbers. The PCE report is just not a concern for the central bank right now.
Yeah, no, and so Atlanta Now GDP, their GDP Now, I think, is what they call their forecast tool. It is going to end the month at 3.1%. Maybe there's a 0.1, but it's going to either at 3 or north of 3. The month ends on September 30th on Monday. That's going to be a healthy backdrop number. If you can, and this is going to be the most important week from a narrative standpoint coming up into labor market week, if you can get through this week, and you don't have any labor shocks, right? Because you're going to have labor data all week long. You're going to have it on Tuesday, you're going to have it on Wednesday, you're going to have Thursday, and then you're going to have the big one on Friday, right? There is the opportunity to create all right, I don't want to say Goldilocks, because I freaking hate when bulls abuse that term, but if the labor market comes in decent this week with a GDP forecast coming in at 3.1%, and with inflation at not a story right now, right? Once again, anything can go wrong in the future. That's why we follow.
Earnings environment that is going to be the.
That's my number 4 point. That's my final point. We're going to talk about that in just one second. But you have the chance if labor market comes in all right. It doesn't have to be stellar. You don't have, in fact, you don't want to have, but if it comes in okay, right?
Inline's good.
Inline's good. This is a great week. Inline is great this week, good. Right? Small beat inline, right? You have the chance of walking out of this week with bulls saying, things aren't so bad, bro. Things aren't so bad.
I kind of feel like that's what the bulls have been saying since we're at all-time high pricing in a lot of things. But in terms of the what you just said, if you do come through this week with labor at 4.2, inflation at 2.2, and GDP at 3.1, that's not a bearish argument.
It's not a bearish argument. All right. And so certainly has
the opposite of a bearish argument.
Yeah, no, it's a really strong, let's take a leg up argument is what it is. And then my final one, I have
earnings. I'm getting into earnings.
I know. Listen, and my final one, and this is a point we stressed here on the podcast at the end of last earnings season. And it is a point we stressed in this podcast when things were going bad, right? When the market was having a couple of its tumbles, is like, listen, we have not had the hint of an earnings recession. Not a hint. In fact, you have an earnings growth story still. Until that freaking changes, that is the get out of jail free card bulls can pull, out of their hat. at any given point, Matt.
No, in fact, you actually have an earnings recovery story happening, and so yeah, are the earnings numbers in the last 3 quarters stand out, amazing, bullish? No, they're not. But where we were coming through in 22 and 23, the last 3 quarters in 24 have been absolutely standoutish in comparison to what we did have, and so no, I see the earnings conversation as a positive one. And honestly speaking, I'm going to do a whole earnings preview next week, so I'll save a lot of the conversation for that. And earnings is also one of my potential October tricks or treats, so I'll save the conversation till then.
Yeah, all right. And so let's fire through some commodity charts because obviously commodities had a great week. When China goes boom, commodities, unless you're crude oil, of course, which just is its own separate world right now. But the cyclical commodities tend to do okay. Matt, the dollar this week, it's been a true slugfest. This thing has just been a just genuine technical fight every day. Labor market week, Matt. This is the week it breaks or not, isn't it?
Well, it's going to be on a miss or a beat there. You miss, and obviously you should see should see a break. And so yeah, I do see this as a make or break week for the dollar. It's at a very very important technical level, right there around the pairing level, around $100. That is a vastly important support level, and if it does give, you better be ready on the commodity side of the equation because you could see some volatility to the top side if we do see a violent break against that dollar. But again, I'll maintain what I've been saying for the last week and a half on the dollar. This is a level that is not easy to break, and it's going to need a catalyst to break it. And the only true catalyst that I saw in the last couple weeks that had the ability is labor on this coming Friday. I certainly did not feel anything economically last week, from manufacturing to consumer confidence. And it wasn't that those are not important. We got a lot of economic reports, but those economic reports are not as strong as this level of support is on the dollar. And so you're going to need to see a catalyst here, and the labor market is probably the catalyst that can start to spark something coming off that level. So definitely keep an eye on that. Gold, I think gold's really, really simple to understand right now. It's the best performing asset class in the market. It's been the best performing asset class in the market. And I'm not just talking from an upward movement in price and how much money people are making. I'm talking from what it should have done to what it has done, to the consistency of the gold analysis playing out. And I don't know if you've heard this from me yet, Mark, but gold has some positive seasonality when it comes to rate cutting cycles. As the last 6 rate cutting cycles, it had an upward movement in price. And ever since that time, we've seen real good momentum here. I will say this about gold. Gold is top level resistance at this point, meaning you're overextended and you're at 2,700. You absolutely could see some secondary development here around that 2,700 level, and a breakout of 2,700 would be that next level. Quite frankly, I think we're marching to 3K here over time. I think we're marching to 3,500 over time. I think we're marching to 4K over time on this one. I think I think gold's been telling the market that for a very long time. And I know our tackle trading pros have listened to that because I know what they've been doing. But I hope people of the Trading Justice podcast have been listening to that message as well, because gold has been a true standout in every form of analysis. And I'm not just talking since the last 2 weeks since the Fed. I'm talking even in the neutrality that we've seen over the course of the last 6 months or so. It was behaving so much better than what it should have been behaving in a pausing cycle. And now that we're into the cutting cycle, it's been doing nothing besides just very consistent, very good price action there. Now, silver, if we are going to see something on the commodity side, and cautiously optimistic here, right? But if we are going to see something on the commodity side, like I have the most confidence in gold of any financial instrument in the entire world right now. But silver here does have the ability to play some catch up. And so that's something that I would keep an eye on here is silver. Unlike gold being a little bit overextended, silver might be slightly overextended here at the 29.5 level. But you have a really good multiple time frame resistance level at 28.5, 29.5. Any breakout there, you got to love the open air on the weekly chart, quite frankly. And so silver is certainly on the radar for a potential breakout. Copper on the radar for secondary development here, as obviously copper gets an oversized bid this week due to China. And then on the Bitcoin side of the equation, I called it the best technical pattern that Bitcoin has had in the last few months. That is not saying much when it comes to the quality of technical patterns, but I still maintain that statement. So Bitcoin looking a little bit better, and options are coming to a theater near you on some of those ETFs. So keep an eye on that as well. My last thought on the commodity side of the equation, Mark, is crude oil. I'm not surprised by the volatility last week. I'm not surprised by any V shape here, and this thing needs to simmer down, settle down. And I just don't think that's going to be happening in any short-term situation with everything that's happening in the Middle East.
Yeah, it's untradeable right now. And even from a credit perspective, I've been very hesitant. Eventually, this will
I don't know
die
how
down.
you would be comfortable.
And I'm talking from the bull or the bear side of the equation.
You got to
right?
have radical overextensions to
radical overextensions, then I'm interested. Radical overextensions, I'm interested, but that's not where we enter the week at, right?
Would you be shocked if we're back up above 70 this week? Would you?
I wouldn't be shocked if we're at 75 or 65.
Yeah, I wouldn't be shocked, and so
a lot of moving parts in oil right now.
A lot of moving parts in oil, no doubt about that. I'll say the number one commodity that's on my mind this week, because you got some other commodities that are starting to play out a little bit as well. Platinum kind of a little bit choppy, but palladium here starting to try to reverse here. You haven't formed a higher level of support in this reversal. It has a chance to do that this week. But I do think the number one commodity on my mind is the silver 29.5 potential breakout this week.
Yeah, I know. I mean, once again, very clean potential trigger.
It's the cleanest
area.
resistance of all commodities right now.
All right. Let me give you some stocks. Let's get to some stocks in the news. We talked a lot of macro here. And we talked about it from a bullish perspective, because guess what? That's what the argument is. When you just call balls and strikes, Matt and I try not to be bulls. We tend to be on the bull side of the equation because they have more people cheating for them. But sometimes it doesn't. That's where it lands right now. Cautiously optimistic. But there are some individual stock stories in the news. I want to start off. I got 5 stocks for you, Matt. First one's going to be Micron. Micron has my favorite CEO on the planet, because he is the most boring human being and is always a straight shooter and just does a fantastic job with his company. Really solid earnings report. Let's talk about the raw numbers first, and then we'll talk into the color after.
Yeah, raw numbers, they had a slight beat on EPS. I don't have all the numbers, obviously. These are your top 5 stocks. I don't know what your stocks are, so I don't have all the numbers off the top of my head. But really, more than anything, Mark, increase the guidance here. And that's the importance here. They had slight beats on EPS. I believe revenue was a little bit mixed, but on the guidance side of the equation, they increased both EPS and revenue guidance, and that's what you wanted to see out of Micron this week, because the AI space, semiconductors in general, AI in general as well, it's been on pins and needles the last couple months on very sensitive to guidance updates. Out of almost everything, we haven't seen any further upward movement in price in the space than the high we achieved as we were going into last earnings season, Mark. This earnings season, we're coming from a lower point on the chart. Expectations are much more tempered going into this earnings season, specifically in the semiconductor space. I think it's kind of setting up for a low bar, jumping over a low bar type situation. But Micron didn't have necessarily jumping over low bar. They had a really good guidance update, like 40% on the EPS for first quarter. It was a legitimate guidance update. What you saw on the technical side of the equation, you saw a gap out, which most likely a little bit of a breakaway gap, but you're definitely overextended, and you certainly would want to see a secondary pattern here. But in general, positive data for the space coming out of Micron this week.
Yeah, no, and Micron plays just a unique role in the semiconductor world as a maker, as the largest maker of memory chips. They're almost like this, like Taiwan semiconductor feel to them because they give you some information on the overall
Yeah,
demand.
I call it an infrastructure play. Is as companies like Nvidia build out the AI space, they have a long coattail here, and there's
Yes.
a lot of people on that coattail, and so the downstream impact on the Nvidia AI conversation not only impacts the semiconductor companies and the software companies out there, but it has a massive impact on companies like Micron. It has a massive impact on companies like Applied Materials and ASML, which are, Micron is just chip memory, but you need massive expansion of memory to be able to build out the AI conversation. It's a very similar secondary impact to what we're seeing in utilities as well. So it's more of an infrastructure AI play, but definitely long tail and a trickle down impact of NVIDIA.
Yeah, I know certainly on both Micron and semiconductors, looking for pattern on really big pattern watch.
Next one.
Yeah, let's go Oklo, OKLO. Now, one of the areas in the market, this was a really big news flow last week and a half between Fed and China and this and that and the other. Oklo, probably the one area of the market that maybe had more individual news than anything was nuclear. You just had a mass over the last couple of weeks. You have just had a ton of stories from the Microsoft 3 Mile Island story to basically bipartisan support for nuclear power to different countries signaling more. You've just had a really big news flow. Now, Oklo had their, now if you, Oklo is a SPAC turned into a real stock. It's Pinocchio trying to be a boy, and is a Sam Altman stock. One of the little sneaky things, Sam Altman, that I didn't even catch this news story until I was going through my extensive notes this weekend. Altman pitched Congress, Biden administration, for massive data center buildouts. Now, whether it is the Biden administration, the Harris administration, the Trump administration, that's coming, right? More and more.
It doesn't
and
matter who the
more and
president
more.
is. Yeah, that's happening.
And Oklo, one of the things I like to see on individual stock stories is a little extra juice on their end, and they got a specific government contract. Now, government contracts from individual companies, well, just look at Palantir, right? Like if you can get a company into the government, like respected train, right? This is not something to ignore because it provides revenues, it provides future revenues, it gives you credibility. Now, Sam Altman, this nuclear power play, not a terrible technical look, but I mostly wanted to bring it up because it gave me a chance to talk about nuclear power, and that's
and that's something we're going to see play out for a long time in this AI build out. Microsoft and the 3 Mile Island, that was maybe the one story that brought this, what is happening on the nuclear side, to the forefront of the conversation. But Sam Altman's been here for a while in terms of the build out of nuclear to power this AI and crypto and every other form of technological advancement build out that's going on right now. Oklo, it's been a stock that nobody really talks about because it's been all over the board, needs to settle down. And if it wants to act like a real boy, give me a break out of the 200-day moving average, give me a consistent trend without a bunch of wicks everywhere, and we'll have more conversation on Oklo.
Yeah, I sold naked puts on it for the first time after the story. I'm just interested in nuclear in general. URA, CCJ.
I am as well. I am as well.
And we will, as those patterns develop, we will be all over them
right,
in our products. ACN, give it to me. Tell me, tell everyone the importance of ACN. They had earnings this week.
Micron gets a lot more love this week than ACN, given the fact that Micron is a much more well-known name in the AI space because they literally deal with semiconductor development in the memory side of the equation. ACN is quietly they are a tier 2 AI name as well. They're actually a much bigger company than Micron from a totality perspective. They actually had a really good earnings report this week as well. That came out with a slight beat on both EPS and revenue and a slight uptick on their forward-looking guidance as well. Technically here, ACN is not part of that conversation typically, as it doesn't get a lot of that pure great trends that we like to track. But it was certainly an important stock to report earnings this week. And when you're looking at these AI names, there's no AI names that report this week, by the way. We had a couple last week. Micron and ACN were the two AI names that reported last week. What you're looking here as we're heading into earnings season is that these companies are not giving us guidance warnings. And we didn't get a guidance warning out of Micron. We didn't get a guidance warning out of ACN. And last quarter was just riddled with guidance conversations and primarily slowing growth out of the tech space, slowing growth out of the AI, slowing growth out of the Mag 7. That was really kind of the theme going into last quarter. Going into this quarter, there's a little bit of a different
It's a different vibe, right?
Yeah, there is.
It's a different vibe. Fourth one I have for you is Costco. Nothing fancy here. Great company that just has ran a lot. Had earnings, right? This is one of those great companies. It's been a great, well, it's been this whole year has been great.
Yeah,
but maybe at a point where we're going to take a little breather is what it feels like after its earnings.
Yeah, and that's what I felt like when I was breaking down Costco's earnings earlier this week at Tackle, is just the fact that there's nothing wrong with their earnings. It came in at 529. That was a beat on EPS. This was a walk in the park earnings report. There was nothing scary. There was nothing great. It was just another day that ends in Y. But expectations matter in earnings. And when you're at the very top end of the trend, and both in terms of the daily trend and the weekly trend, and you're a $900 stock in an environment where 10-to-1 splits are not abnormal in our world, Costco needs to do something to inspire people. They need to do something to it's like an old married couple here, bro. Like they got to do something to start making it a little bit more exciting there. It was just a good report. That was it. I don't want to say anything negative to it. It's just a late stage trend on both the daily and the weekly chart. You're talking about a parabolic situation over the last year and a half, and we're obviously slowing down. A good earnings report doesn't stop slowing momentum.
Yep. And then my final one is a little look ahead as we're going to get into earnings. We're going to talk about earnings a little bit more here in a second. Nike. Nike has earnings this coming week. We're going to get into this is going to be one of those heat checks for me, right? Consumer discretionary has been running hot, right? We've seen that. We've seen that in earnings reports that maybe should have gotten sold off. We've seen that on the technicals on the chart. A little bit of heat check on consumer discretionary this week on Nike. Do you think it's an accurate gauge for a heat check, or maybe I shouldn't be putting too much weight on price movement one way or another?
Well, let me put it like this. Nike's been a quote unquote shit show for the better part of the last couple of years, and discretionary is at all-time highs with momentum right now. And so I find it very difficult to overlay a Nike impact on the discretionary space in the market as a whole. Is it a heat check on the overextended situation, or whether or not Nike can actually be a real company for us to discuss at some point? Yeah, maybe. But for discretionary as a whole, I wouldn't read too much into Nike.
Okay. I just want to throw that thought out there.
Especially with, you should expect a little bit of a snapback in discretionary regardless. But I don't see it as a heat check, no.
Okay. Let's get into some October trick or treats. Listen, laid out a case to be a cautiously optimistic bull. But listen, you're always trying to look at things that can go wrong. In fact, that's what I do. I love the exercise. I wake up in the morning like, what can go wrong? Like, listen, October's coming, right? Mm-hmm. October has been a month in the history of the market where some of the nastiest just nonsense has occurred.
1929 was October.
1987
was
2018 wasn't peaches.
No, it was not. It was not peaches in October. 2008 was not a fun October. 2008 was a, obviously byproduct of the September seasonality of 2008. But
last year's October sucked.
Yeah, well, Well, honestly, October's and election seasons might be a little bit different than October's and
Yes, they might.
non-election seasons. But I just want to do a little bit of a fun segment here as we conclude the podcast here this week. And I wanted to talk about October surprises in general as we conclude September seasonality. Remember, the one thing we all talked about with September going into September was September seasonality. And the first 3 trading sessions of September certainly proved out that seasonality really, really, really quickly until, we got back into okay, it's more about what the economy's doing, what are these stocks doing. But I wanted to just do a little quick fun segment on trick or treat kind of going into October. Now, I got 3 things here, Mark. Number one, are we going to trick or treat this month? Earnings season this go around, and I'll do a complete earnings update in next week's podcast, and obviously we'll have some detailed analysis in the Tackle Trading newsletter next week as well. But this earnings season is really, really important as every earnings season goes. But if you'll recall, Mark, last earnings season, okay, we're thinking about the S&P 500 here. Last earnings season, you were at the top end of a trend, and if you'll remember, the bar on expectations was not lowered. And so unlike most quarters, we see the earnings expectations get lowered. They were not lowered last quarter. I talked about it for 3 consecutive weeks last quarter. They were not lowered like they typically do. And so the market was priced in at a high price on the trend without lowering any bar of expectation, which meant when the market had slightly better than expected reports, the market sold those reports really aggressively because the bar was not lowered. Mark, that led to some dramatic first few weeks in earnings analysis last quarter before we saw the market V-shape recover and get back into some degree of consistency. This quarter, you're going into earnings season not as overextended. We've had a recent breakout. We're not as overextended, but Mark, the bar this time, Wall Street learned from last quarter. They lowered the bar on average the same way they typically do, which meant over the course of quietly over the course of the last month and a half, the earnings expectation bar, which was expected at 7.8% blended growth, is now at 4.6% blended growth. And it's much easier to overcome that expectation than it is one that is a little bit higher in terms of those standards. And so are we going to trick? Are we going to treat in earnings season? I don't know. We're going to have to walk that road together. But at the end of the day, we do have a low barred expectation going into earnings season, and we have lots of areas of the market that are not at the all-time high pricing. So are we going to trick or are we going to treat? Earnings season starts in a week and a half. Next week, we'll do a full update in this podcast on earnings season total expectation. My second trick or treat, do you have anything to say on earnings season?
No, I mean, I haven't seen, like I have this template of big bear narratives that have impacted the market over the last 50 years. .com really was about earnings recession. You didn't have really terrible economic conditions. You had terrible earnings. One of the untold stories of .com is it was a combination of valuation and then earnings recession. And so the earnings recession, I haven't seen anything. So I'm giving and I've been this way for a while. I'm giving the bulls the benefit of the doubt until I see, and I just haven't seen. So I think this one breaks for the bulls.
I would be extremely surprised to see an earnings recession conversation.
Yeah, so I think this one breaks for the bulls.
It's not. That is not being discussed by anybody in Wall Street.
Hard to have a bear market if you don't have that conversation.
Exactly. But you know what? Whether or not we get that upward movement in price and we get that beautiful trend of seasonality in November and December is probably going to be birthed out of this earnings season, in my estimation. So I do feel this earnings season is pretty important one. My second trick or treat is election policy rhetoric. And what I mean by this one, not to get too deep into the weeds in election conversation, as obviously it is dominating every aspect of our life right now. But in the last couple of weeks, I've seen both candidates really turn up the how should I say it? The what's the word I'm looking for? pandering maybe here.
Oh, you mean it's an election season?
Yeah, maybe the pandering might be off. I think the pandering is literally at record levels right now. Mark, I've
Well,
seen.
no, Matt, it's an election season in an extremely increasing populist backdrop, right?
Oh yeah,
That
both parties
pandering is going
fight
to
for
be hot.
populism messages. Yes,
And populist message going to lead to some pandering, right?
populist messaging does lead to pandering. There's no doubt about that. But Mark, in the last just couple of weeks, I've seen Trump propose price caps on credit card companies. I've seen basically Kamala do everything in her power to run to the middle as fast as she can, leaving behind any resemblance of any historical accuracy on policy. It's been a just amazing election season, and I say that kind of tongue in cheek. But from a policy perspective, do we see policies come out of the candidates, policy proposals come out of the candidates that the market has to price in, that the market has to give a little bit of credibility, a little bit, because the market is going to discount some of this policy rhetoric. I can promise you that. The market has already discounted some of this policy rhetoric. But what are your thoughts on the policy rhetorics one here? I'm very interested to see what policy proposals happen over the course of the next month, and whether or not
Everybody gets everything. Everybody gets everything. Everybody gets everything.
I
right?
think that's in general how the market is hearing a lot of this policy.
Listen, like when I look at the policies, and we should have an election preview coming up because it has market things worthy of discussion.
Oh, 100.
Even if it offends everybody, because we'll call balls and strikes.
That's what we do.
We
never mean to offend anybody.
We don't. It's just like I think one has to look at look at the policies that come out as generally supportive of the economy, right? Because there's gonna be a lot of money spent.
Nobody's going to say anything that is not supportive of spending and increasing debt. So
you're not going to get any red flags there.
No,
you are going to have okay, what does this mean for inflation down the road? But that's not a story today. Right, that's going to be a story when it manifests itself, if it manifests itself, and you'll see that in the numbers, and you'll understand
it's not just like with Harris trying to get to the middle. It's not just that; it's real policy language coming out. Tax policy, for example, Harris is proposing $5,000, $6,000 tax credits, $50,000. Business tax deductions. Trump is proposing no tax on tips. Trump is proposing tariffs, and so you have legitimate policy discussions that are happening here, and they're radically different than the environment we're currently going through. And so my question on the policy rhetoric is, does the market overreact to the language or the rhetoric that comes out from a economic policy conversation perspective? Do you or does the market just discount that as election rhetoric 1 month before a very important election itself?
And once again, this is going to offend somebody, and I apologize. I don't mean to do so. I don't think the market cares. There's going to be areas of the market.
I don't think it does either.
I don't think the market cares who's elected, because all the market hears is money. I
do think the market cares who is elected, but I don't think they care the rhetoric around policy in the last month going into the election.
There is a surprising lack of feel of the election, because sometimes you'll get an election swing. You saw in 2016, you saw in 2020, right, where you get this little apprehensive. I'm not seeing that in any areas of the market. Maybe we get it before the election. If we're going to talk October trick or treat.
Well, and that's kind of my third one here is do we get an October surprise? And Mark, the October surprise is something that is talked about in political circles for a very long time. I'm going to ask you a question. Do you know what election cycle the October surprise was created in?
Oh, I do not. I should know this. I do not.
Give me a guess.
I do.
It's okay. I'll give you a hint. Modern elections. Modern post World War II.
I'm going to say 72.
That is such a good guess. It's wrong, but it is such a good guess because I do think you can go back to 72 to make the argument that that was the first October surprise.
Yeah, like, I mean, I was just trying to pull out my historical what's going
Maybe
on.
people can't remember what that surprise was, but in 1972, you had basically Nixon and Kissinger announce peace is at hand in Vietnam. And so to shift the probability, the polls were really close. But after that surprise, that headline came out that we're going to have peace in Vietnam.
Nixon
basically, that
got a second term, or at least a partial second term.
They got a partial second term. 1980 was actually when it came. And if you'll recall, in 1980, you know this story very, very well.
I think I'm right, even if it wasn't coined.
You are not right. You'll get an attaboy. You'll get an attaboy. But it was in 1980, the Iran hostage deal.
Oh, yeah.
That was the October surprise. And if you recall, it was obviously Ronald Reagan against
Jimmy Carter.
And Carter was negotiating with the Iranians who had taken American hostages over the last year, right? And Carter's negotiating. Now, there's a lot of conspiracy theories around October surprises because, again, they're October surprises. But the conspiracy theory is basically that Reagan was negotiating secretly with the Iranians to basically hold off on the deal. Now, whether that's true or whether the historical account of the Iranians just did not feel comfortable dealing with Carter and were scared out of their mind of Reagan and what Reagan would have done when he became president, because the Iranians did let the hostages go the day of his Reagan's inauguration. But it was in 1980 where you had the first official October surprise. Then in 1992, you had the Iran-Contra situation, the investigation going on. You remember that 1980s Iran-Contra. Iran is always involved in our elections, by the way. Iran hostage crisis in 1980, the Iran-Contra, late 1980s investigations into early 1990s. 1992, Iran-Contra, there was an investigation going on, and they made an announcement that they were investigating, they meaning the DOJ was investigating George Bush Sr.'s Department Secretary of Defense. And all of a sudden, everybody's like, whoa. Now, obviously, we look back at that 1992 election and really think third party, Ross Perot's impact on that one. But there was an October surprise that certainly did narrow that gap for Bush. 2000, you had a DUI arrest that became public for George W. Bush. 2004, you probably don't remember this one, Mark. 2004, bin Laden came out with a video in 2004, and basically Bush is running tight, just a very tight race with Kerry. Bin Laden comes out with a video in October basically saying George Bush is an asshole, and all of a sudden every American's like, you're the wrong person to say that.
Yeah,
we're electing Bush.
Americans don't like this.
Yeah, and so that was a bad one out of 2004. Obviously, in 2008, you had the economic collapse that happened in September and October. That year was that surprise that pulled John McCain off the campaign trail as they had to sit in Congress figuring out all these bills for weeks and weeks and weeks. That was an October surprise that really did help Obama coming into that election. 2016, you had the Clinton emails getting hacked by I forget the guy's name off the top of my head, but you had the DNC Clinton emails that were released. Like these October surprises happen. Do we get one this time around? Now, realize this, October surprises are typically some degree of foreign policy driven, some degree of geopolitical event. Do we get some news coming out of the Middle East with Israel and the war that's been going on there for the last year? Do we get news coming out of Ukraine? Or does some of this news get delayed, like in the 1980 example? Do we get news coming out of China and Taiwan? Do we get Iran for the fourth time in the last 11 elections, try to get their filthy little fingers involved in on this one. So October surprise is certainly going to be part of this. Now, what October surprises have done is they have typically narrowed the polling. And so typically the October surprise comes out on whoever the leader is, and it kind of narrows that probability a little bit. Do we get an October surprise? Does it change the election probability? Does it have a market impact? I'm an election geek. I'm a political geek. I know I'm one of those weird dudes that actually really enjoys election season. October surprise is going to be an interesting one this year. What's your thoughts on that?
Well, yeah, I mean, other things, obviously, we got wars in multiple places where there could be something like this. I mean, we had a port strike that's set to start on Monday. You know, if that port strike lasts a couple of days, nobody's going to care. If it lasts a week, nobody's going to care. If you've had shipping shut down for 3.5, 4 weeks heading into the election, all of a sudden people are going to notice when certain goods. I mean, you think about this. If a port strike cripples things, then all of a sudden there's things on shelves that aren't there. That would have an impact. Now we'll see how that plays. They're set to go on scheduled market.
And honestly, when you're talking about a 50-50 type probability right now on Harris versus Trump, that's kind of where the betting markets are. I think it's like 51-49 right now, but it's like it just goes up and down between that 50 quite frankly all the time. You could get a lot of different things, but
I mean,
I'm fascinated by it. But I will say this. You're going to get a lot in this election season. October is going to be full of a bunch of just chaos.
I'll give you another October surprise.
Yeah.
That's not in the traditional sense. So it's not, this is not in the political. Markets front run November and December seasonality.
Well, at that point, I'll just talk to you about the breakout of a trend and talk about trending analysis.
Yeah, you'll be talking the breakout of 6,000 on the S&P is what you'll be talking about.
If we want to talk about the breakout of 6,000 in December, I'm open to that conversation.
No, that would be the October.
Oh, that'd be the October one. Yes, I do think we will be talking about that eventually, but I just find the last 2 points, the election policy rhetoric and the October surprises, more than anything, be prepared. Let's be prepared.
No, and that just sounded
prepared.
You should at all times be prepared as a trader. Like, oh, something could happen. I need to be able to adjust.
But it's specifically.
But you are in a month where the odds of something.
This is the craziest election we've had since the 2000 election.
The odds of something happening are a lot higher than your average month.
No. That's not my point. My point is, I guarantee something will happen. My point is I guarantee 15 things will happen. I guarantee there's going to be things happening every single day that people are going to call an October surprise.
Listen, I'm the radical brother. I don't even know how to talk you off the ledge.
No, we're going to have 15 October surprises, but do we get a real one? If we get a real one, we'll see the market move, not just not just political rhetoric. But
all right, well,
that's what I'm talking about.
I've enjoyed the podcast. Hopefully you have. Hopefully everyone else has as well. Matt, pitch us a little tackle trade and close out our show for us.
Yeah, if you're not part of our pro membership at Tackle Trading, obviously you could head over there to tackletrading.com and become a member of the #1 Trustpilot reviewed education company in America today. We are the #1 rated company from a financial education perspective because, quite frankly, we will do whatever we can for our community. We meet every single day. We put out a tremendous amount of information. We put the education and application in absolutely anything. If you want to be a part of an amazing community that puts you first and will do anything they can, those coaches will do anything they can to help you find your success. Come over to Tackle Trading and be a part of the #1 rated financial education company in America today. So hopefully you guys have enjoyed the podcast. And if you do, make sure to give us a like and share on any platform you are watching that on, whether it's YouTube, whether it's listening it through, iTunes podcast. Give us a nice little review if you're watching it on X. Make sure to like and share. We really do appreciate our community as much as you could possibly fathom. We love our community, and if you need anything from us, you can always hit us up at team@tackletrading.com, or you can go over there to our Tackle Trading Discord channel, and you can ask any coach any question you need to as well. With that said, I hope everybody has a wonderful week, and hit us up if you need anything.